All right, traders, welcome to today's end of day recap. This is also the end of week recap for Friday, July 22nd, and a week that a lot of green on the screen in terms of the indices. I will recap the performance in just a minute for the week. Risk disclaimer in front of you, everything that we're going through is for information purposes only. You could read the full risk disclaimer there. So before we review the whole week, let's review the day. For the most part, clearly a down day for the indices. S&P was down 1%. Qs and more momentum areas kind of really got rocked a bit today. The Qs, which were, kind of started off the day, kind of making a comeback after, really dismal earnings from a couple companies. Snap, of course, gets the headline. Even though, I'll come out and say it, I don't really understand why Snap is relevant, but that's just me. I think that the company has been, other companies have a better mousetrap. TikTok is for a while now has been kind of dominating that space, but I guess some people think it's still relevant because maybe it gives an idea of advertising spending, right, for that space. And so anyway, was the one report. Also, STX also came out and kind of ruined the day for the semiconductors. And then a few others, which we'll get to. But for the day, look at the performance, by the way. Oh, and I was going to say, look at the performance of some of the areas that were beaten up. So overall, we're going to go through the charts of the S&P and so forth. Not that much of a give up in terms of the S&P, NASDAQ. They still are holding the short-term trend, right, which is up, again, short-term. But we're kind of at a pivot area. So let me recap that. One thing I also just wanted to bring to your attention, well, maybe two things, right? Bonds continue to rally, right? I'm not sure what exactly the reason is for that, other than, we did have some economic data that came out, which was pretty poor, which was right around the turn in the indices. So just bring this up here. All right, so we had U.S. manufacturing and services number, right? This is a little bit different than the ISM numbers. This is the PMI data, right? And the services came in much lighter than expected. Remember, anything above 50 is expansionary. This came in at 47, and the composite PMI came in at 47.5. So, perhaps that kind of kicked out the leg. The market was holding up, after some of those bad earnings reports, but maybe this just kind of kicked out the leg in terms of what was holding up the market today, and we started to see this move down right around 9:45. Now, again, this candle looked like it was not very good as soon as I saw it, where we were moving higher pretty decently, and then we had this reversal, and we chopped around for a little bit, but really started to kind of head lower once we got to the 11 o'clock hour. Right, so let's go. I just want to recap the the overall chart for the S&P first, and then we'll do NASDAQ. But nothing really alarming to kind of look at here. Yes, a little bit of a move back and back under the moving averages, but if you zoom out here on the 5-minute, which I forgot to cover, we did put in a higher low, right? Here was the low from yesterday. So, we didn't have the bounce, of course, that we had yesterday, but we did close off the lows. All right. And the daily chart, which is here is the most important thing. We actually just basically had an inside day, and we closed right around that top of value. It looks like we closed a little bit inside. It's just shy of closing closing the day outside of the value area, but it's basically just an inside day. So, it kind of sets us up for a very big week next week. We've got, a couple things going on. So before I get to that, sorry, I'm kind of back and forth, and it's been a long week. But one thing to note, besides bonds, which were stronger, and that kind of started the day stronger even before the 9:45 economics. So, another nice move for bonds. But look at the VIX for the day, right? So that's what's known as a diversion. right? And every time I point this out, someone says, well, that's because someone always tries to rationalize this. I don't know why. I don't know why traders just can't take the information and just say, huh, that's interesting, right? That's typically, that's not to go off track here, but that's typically how you want to absorb new information, right? Looking at your indicators and looking at some of the areas underneath the hood, right? And so when you see something like that, right, when the VIX is down on a day where the S&P and the Qs were, well, first of all, the VIX is just for the S&P, but that is a bullish, that should be known as a bullish divergence. So the job is not to come up with reasons why that happened for the day. It's just to say, hey, that's pretty unusual to see the VIX down with the overall indices down. All right. So that's also, positive, I would put that as a positive. And remember, when I talk about these factors, right, there's never one thing that is going to say, oh, geez, that means it's, the result of that, of what we're going to see next week is positive or negative, right? It's looking at a whole bunch of different things, right? Putting together pieces of a puzzle and saying, okay, is this okay for the market? Is this a place that looks healthy and for the overall market, or are we seeing more negatives than positives, right? And that's basically how I kind of look at the overall market. We look at bonds, we look at the dollar, right, to see what's going on there as well, right, to give us an overall view. So big week next week. So I'll take a pause here before I go into the NASDAQ, just to talk about that. So next week, right, we've got the Fed meeting in the middle of the week, right? Let's talk about that just for quick 30 seconds, right? And you'll hear me talk more about this next week. But bottom line, what the market is pricing in is 0.75 percentage point, 75 basis points of a rate hike for next week on Wednesday. And then we don't have anything, and we won't have a Fed meeting in August, and it will be towards the end of September. So right now the market is pricing in about another, between another 50 basis points to 75 basis points for the September meeting, but there's going to be so much information that's really that could really change that that expectations of what we're going to see for September. So we'll hear what Powell has to say in the press conference, and about what he's, of course, he'll make a bunch of statements about inflation and about what he's seeing and about job growth and whether or not he's going to provide any type of pivot. I don't think, my guess is, I'll give you my view because it's my video and I'm happy to give my opinion on these things. I think he does what is expected, the 75 basis points, and then he just says, we're going to have to wait and see. He might, in the press conference, sometimes something comes out, right, that affects the markets. Maybe he lets, by accident, he says something about how he's seeing, that the job market is getting a little bit weaker, right? We are hearing about a bunch of different hiring freezes. We're hearing a little bit more about layoffs. So if he drops something like that and hints that they're not going to be super hawkish, right, then you might see a rally after that, right? If he doesn't say much and just says, hey, we're going to have to wait and see, we might raise rates aggressively again in September, and maybe they pause, then maybe that would kind of be in line with expectations. All right, so that's what I think. I think if he hints at being dovish and worrying about saying that he's worried more about the jobs than he is about inflation at this point, then you might see the market equities kind of take off with that. All right, but if he doesn't, then it's really going to be, I don't want to say a non-event, but maybe not so much of a reaction, right? But next week is really going to center upon, also besides that, thrown into this, thrown into the Fed meeting is all the big earnings reports, right? Specifically, we get big technology and consumer discretionary next week. So that's going to be very interesting. And I talked about this. I did a longer than normal video for our members today. We do one every day, midday, but I go a little bit longer on Friday because I call it the look ahead and the Q&A session. But, it's interesting how some of these companies are, what their reaction is to earnings. And I want to try to explain this quickly because I don't want to take too much time, but I'm going to just single out a couple of reports, right? Netflix, right, had a pretty good reaction to bad numbers. Why do you think that happened? Well, because this name has already been washed out, right? The expectations were very low, and there hasn't been a lot of positioning in this, right? That's the reason why, in my opinion, that this went up, right? Also, take a look at what happened in Sam Adams today, right? Also bad numbers, rallied on bad numbers. Why? Because most likely it's priced in, right? There's not it's not a overweight position for people, right? You don't have a bunch of analysts either that I think have, let's see, for these two companies, let's see. And I think it's A&R, right? For analyst rankings, right? Here you go. You have 3 buys, 10 holds, and 2 sells, right? What about for Netflix? Let's just see what this, now this may have changed a little bit. Netflix still has 17 buys, 20, I'm surprised it still has 17 buys, but 28 holds, 7 sells, right? So the expectations, especially for something like a Sam Adams, and I guess for this, but they may have some of these ratings may have changed this week, but the expectations were low. I think the reason why I'm going to mention this, because we have Apple, Amazon, Google, Meta also reports, to Microsoft reports. The expectations are going to be a bit different for for these companies, right? This gets lost on financial Twitter, FinTwit quite frequently. People look at the numbers and they're looking at the numbers for face value and they get confused. Well, I don't understand how Netflix went up, right? The numbers were not good. Well, it's all about the positioning and what the path of the stock price has done, whether or not there are a lot of longs in the name, right? It amazes me that people just think it's about the pure numbers. It's not just about the pure numbers. It's about what's going on in terms of positioning in the stock, right? So when we look at the difference here in Apple, right? Apple, you have 36 buys, 11 holds, 1 sell. So in my opinion, we'll do one more. Amazon, right? Amazon has 56 buys, 1 hold, and 2 sells, right? So the expectations are much, much different, right? For an Amazon or an Apple versus a Netflix or a Sam Adams. These names that reversed and went higher this week. All right. They're going to have to, if they don't deliver or if they say something bad about their guidance, it's going to be a lot rougher. Right. And again, I'm not trying to make a prediction. I'm just telling you from my experience, it's a lot about expectations and it's a lot about positioning and what the street views as, even though Amazon is decently off the highs still, right? This is still more of an overcrowded name when you look at overall positioning, right? Probably people have been, investors, funds have been reluctant to get out of an Amazon versus what has transpired in Netflix over the last year. All right, so I'm just covering this now so that you kind of have a sense, but I believe that the stakes are much higher for companies that, some of the companies that are reporting next week. Meta, maybe not so much, right? But Meta, as we talked about, rallied this week, so an oversold bounce, right? And this is a bear market bounce, right? And this is right into the top of value. And we talked about that in yesterday's video too, that some of these names, right, we're going to see some separation this week. And here is the performance for this week. A lot of momentum names, a lot of higher growth did very well, but that's going to separate, right? Once we get past the Fed meeting, once we get past, basically the better part of earnings season, you are not going to see every growth name go up. You probably won't see every growth name go down either, right? It'll probably be a little bit more specific based on the earnings results. Also, one other thing too that we do at, that I've been doing at TTG, Tribeca Trade Group for a long time is, my job really isn't to bet on which one of these companies is going to have good results. I can't tell you, I don't work for Apple. I don't work for Google. I don't, so I don't have any information about, and only really the insiders do as well. People don't realize that the ones who know how the company is doing is, are the employees and the insiders inside the company. What our job as traders and investors is to take the information from, what these names are going to do after earnings, right? So if a company does raise guidance, right, and has good, mentions really good things about their future, kind of like Tesla did this week, right? The stock is going to react that way, and it might set up for the quarter, right? We're going to see various different names be set up for good tradable opportunities for the next quarter, right? My job is not to try to predict which ones are going to actually do that. It's to set up afterwards, right? And then basically look for trades, where the institutions, which are positioned very lightly, right? Because we've seen different gauges, which I'm not going to get into, but the institutions are positioned pretty lightly. They're going to want to get involved in some names for the next, over the remainder of the year, right? They're going to have to be purchasing, right? Look at the volume yesterday in Tesla, right? So Tesla's one of those names. I actually tried to trade today, and the breadth was just too negative for the day, right? There's too much selling pressure, so I could position in this next week, but ultimately I'm looking for a move to right around 878, 875 in Tesla. So, but that's the name of the game, right? It's not to make, I think more inexperienced traders think, oh, I got to play this like it's like they're at a casino, right? We're not doing that. At least I'm not doing that. I'm going to be looking to react to what names, what company comes out and says, hey, they're managing this difficult environment very well, and they're encouraged by what they see in terms of growth in the future. That's how we're going to be playing. Those are the names that we're going to want to go after. All right. So I mentioned I would go over the Qs chart. The Qs did close inside value for the yearly value area. So I think that's a good step, right? If we look at the daily chart, right, we did kind of back into that 20-day moving average, but we're still above value here. So, there's nothing wrong with this. And, the one thing I'll say, the one silver lining for Snap and what a couple of these names that reported last night did, right, is they're setting the bar a little bit lower, right? I don't think that you really, my opinion, I don't want to see the indices at like a 2-week high going into the Fed meeting, right? Going into these big earnings reports. It's a little bit better that the expectations came back a little bit and might, I think if we chop around and move in a little bit, then that's fine. What I don't want to see is us really kind of give back too much territory. And I'll leave you with this one chart that I'm watching, biotech, right? This is one of the better areas over the last couple of weeks, but you could see it's basically went sideways for 2 weeks. Now I want to see this resolve and go higher. I was long some biotech. I actually took some targets into this, thinking that my target would be 88. It didn't get that way. It didn't get there. So I actually got out of the rest of the position, and we'll watch this group. But this is one that we don't really want to see go back below the 50-day moving average. Even in here, it might be iffy, right? But I think we need to hold 75 if biotech backs up. So there's a lot of different things to kind of watch, outside of, some of the big growth names. I'll just kind of give you one other thing that I don't want to see a disaster next week. We see a disaster next week, right? Then we might, retest the overall lows. Regardless, it won't matter too much for me because I'm pretty, I'll be pretty positioned lightly, going into both the earnings and into the FOMC event. All right, guys, that is it. Oh, I didn't show the performance. How about that? All right, I think I did. I showed the really briefly. I showed the growth, but you could see the top line, right? Bonds were up 2.1% for the week. SPY was up 2.6. IWM, as well as the Qs, both outperformed, both up about 3.5%. When you look at the sectors, consumer discretionary put in a really big move today, not today, this week, almost up 7%. The home builders, they are hitting resistance at this point, but I mean, talk about a group that has been doing the the opposite of what you hear in terms of the news, right? You hear all these bad things about homes and prices going down and so forth, right? Now, again, it's into resistance 6110, right? And we'll see if that begins to turn away. But again, I'll wait for a little bit of confirmation that that's the case. For now, it's super strong. The semis, even though down today, still up over 5.5% for the week. Retail names were also strong this week. Energy was in the mix there too, as well as the banks, both over 4% for the week. Again, biotech really didn't participate this week, actually finished down. And the utilities, healthcare, staples, right? So the defensives were, which is fine, you know, some of decent group of the defensives did not perform this week. That's what you kind of want to see, more risk on. All right, and here's the international performers for the week. Guys, have a great night. See you over the weekend if you're a TTG member, because I do put out our watch list every Sunday as a starting point for the week, and we'll go from there. If you're not a member of Tribeca Trade Group, right, go to tribecatradegroup.com and sign up to be a member. Thanks, and have a great weekend.